Welcome to my channel. I'm Jackson Summers, and in this video I'm going to be talking about the top 3 stocks you buy now for summer 2021. These stock picks are based on the company's fundamentals and future earnings potential. When I invest in a stock, I like to find those undervalued ones, right? So I'm looking at the company's market cap, projected sales and profits, debt, cash on hand, forward PE, price to sales, and much more. So if you're currently looking for some new great investments for 2021, please keep watching as I'm about to give my reasoning behind why I think these 3 stocks are absolutely amazing, and I'm also going to be including 3 honorable mentions. Alright, so let's get right into this. So, stock number 1 is Corsair Gaming. You guys probably have heard about this. I did make a video on it about 2 days ago, and I've kind of discussed why I believe in it so much, and I've made it into my biggest stock position. But essentially, it's just a very undervalued stock, right? If you don't know, the company sells gaming and streaming products. They own brands like Scuf and Elgato Streaming, so they have a huge influence in the gaming and streaming space. Millions of people around the globe love their products and will continue to buy from them as they have built that trust, right? So this stock is only going to increase its revenue, in my opinion, especially with more and more products coming out. That's going to make streaming and gaming a much better experience for everyone. Their stock is currently trading at $33 a share, or a $3 billion market cap, with projected sales for next year being $2.16 billion. However, do not be surprised if they outperform those numbers by a landslide, right? It could end up being 2.5, maybe even $3 billion in revenue, and the profits are expected to grow quite a bit as well, which for me is very important, right? Because no matter how much a company is increasing their revenue year after year, if they're not actually making any profit off that income, I don't know how safe I feel as an investor. Corsair's profit margin is around 7 to 8%, which is pretty good. However, I see them increasing this massively in the coming 3 to 5 years. Another great thing about Corsair is they have 0 debt on the balance sheet at the moment, and also they have a good amount of cash on hand. However, I see them trying to increase their cash on hand to maybe 300 or 400 mil, just so they can grow at the speed they want to. The forward PE is only 16, which is well below the market average of 20 to 23, and combine that with a price to sales of about 1.56, and you have a very undervalued stock. I believe Wall Street will start noticing that very soon and begin investing heavily, which could take the share price over $100 easily by the end of 2021, and honestly it could start moving as early as this summer, which is why I'm buying shares up left and right. My second stock pick is going to be Dropbox. Now Dropbox seems to be a stock under the radar. Not many YouTubers or even articles are talking about how undervalued this company is and how much future growth is ahead of it. Dropbox is a file hosting service that offers cloud storage, file synchronization, personal cloud, and client software. It's currently trading at $30 a share with a market cap of about $12 billion. Projected sales for this year are about $2.12 billion. However, do not be surprised, and I know I said that about the other stock, honestly this company could easily outperform those analyst predictions just because of the growth and the balance sheet they have. It's absolutely amazing, right? They have almost $2 billion in cash, 0 current debt, so really they have just all that money that they can use to grow this company at a faster and faster speed while still increasing profit margins. Another nice thing is their forward PE is about 19.91, so it's a bit below the market average of 20 to 23, but when you combine that with a price to sales of only 6, you can really start to see how undervalued this is, right? And you might think, okay, 6, that's not like very low or very high. However, the industry that Dropbox is in tends to see stocks with 20, 30 price to sales and forward PEs of 30 to 50, right? So there's obviously a huge gap and a huge difference with Dropbox, which is why I see them as being undervalued. And I think Wall Street and pretty much everybody is going to start to realize this and pile money into this stock quite a bit. It's already up about maybe 30% in the last month to 2 months. So that's obviously huge growth, and I think only more is coming. Now my third stock pick is going to be one, I guess you could say, that is more boring, But honestly, I do see some growth coming for them, and it could be kind of just like one of those safe bets that you invest into just to keep your portfolio a bit more balanced. Now, that company is Walgreens. I'm sure everybody knows what it is, right? It's a huge company in the retail space, which you might think, wait, that doesn't seem safe, that seems a bit risky, because a lot of retail companies are going out of business. But Walgreens is a bit different. They have been around forever. Their profits and sales have continuously grown. However, this year they are expected to see a sales decline of about 6%, but do not worry, as many analysts predict it bouncing right back next year and actually see some pretty good revenue growth coming for this company for the next 5 years. Currently, their stock price is about $52 a share, and their market cap is around $45 billion, with projected sales for 2021 being about $130 billion. So there's a huge difference there, with a price of sales of only 0.32, which is very, very insane, especially when they're expected to bounce back and continue making money, right? Not just sales, they're actually going to be making profits this year and the coming years. Of course, that is analyst predictions, so those could be wrong. However, I really do not see them having drastic sales declines and net income declines year after year, right? Also, the forward PE on this company is only 10, which is absolutely insane, right? It's about half of the market average, and they still have a lot of things going for them, right? They have $10 billion on the balance sheet in cash, which means they can deal with a lot of different issues that come at them, right? Of course, they do have some debt. They have about $5 billion in current debt. But another thing to take into account is this stock has dividends, right? It's the only stock out of all these ones I've talked about that actually has a dividend, and it's about 3.52% for the coming year, which means for every $100 you invest, you're getting back about $3.50 in dividends, which is actually not too bad, as right there you're already beating inflation, which is honestly the goal of investing, right? We invest because we don't want to lose money from just letting it sit in a savings account, not collecting enough interest to cover inflation, which is estimated at 1 to 3% per year. However, remember, the stock can always go down, right? So that's why I look for stocks that offer dividends, but not insane ones like 6% or 10%, because right there you should think, wait, why are they offering me such a good dividend? And that's because many stocks make up for the lack of their share price increasing with dividends, right? Which is great. However, it's best to actually look for a stock that has share price growth potential and a pretty good dividend just to back you up. Now, here's the honorable mention. So the first stock is going to be iRobot. They have a low forward PE and low price to sales. Also, the revenue is expected to keep growing along with profits. Additionally, they have millions of loyal customers and very high quality products that people love and continue buying. Now, the second stock is definitely a bit more risky. You might have heard about it. However, it's pretty low market cap, and that is GTech Holdings. This is a high risk, high reward play. There's not much data to go by, but the recent earnings report was fairly decent and revenue is expected to keep growing. However, they're definitely not profitable yet, which is going to probably take some time. And the market cap's about 100 mil, which is obviously pretty small. They have no current debt on hand, which is really good to see, especially for a company this new and growing rapidly, right? It's good that they actually have no debt and they have a great amount of cash on hand compared with how small the market cap is. I believe they have over $20 million in cash, which is really good to see, and it's going to help them grow a lot faster. My last honorable mention is going to be Good Food Market Corp, and they go by Good Food, and essentially they deliver customized recipes and ingredients to customers' doors. So all they have to do is follow the recipes and use the ingredients that were shipped right to their door. They don't have to go to the grocery store, and it's been a very popular business model, especially with everything going on last year, and their sales are expected to keep growing massively year after year for the next 5 or so years. So really with this company, it's about getting to a point of profitability, right? Because it's a newer business model that hasn't really had that much time in the markets to really figure out, okay, what's the best way we can actually create a great profit margin and increase those profit margins year after year. So I don't think they have figured that out yet, but they are definitely in the process of trying to do that. Is definitely giving them the resources they need to figure these types of things out. The price to sales is only about 1.9, and the market market caps around 400 to 500 million, with projected revenues for 2022 being around 500 million. So it's going to be very interesting to see how this stock performs over the coming year to 2 years. So I hope you guys enjoyed my stock picks and explanations for why I believe these are some pretty good companies to buy for the coming summer of 2021 and onward. So comment below what you guys think of them, as I'm really interested in seeing if you think there are some good stock picks or do you think they're terrible. Let me know, be honest, and I also want to know what you guys are buying this summer, so let me know maybe your top 3 or top 5 and hopefully get our finances to a better place. If you guys enjoyed this video, I would really appreciate if you could smash that like button and subscribe to the channel and turn on those post notifications so you never miss an upload. Thank you so much for watching. I really appreciate it. Have a great day. Peace.